Hello and welcome to CMS Forex News. I'm market analyst Nick Nassad. Today is Monday, October 5th, 2009. The euro-dollar pair, following a test of the 1.45 area in Friday's trading, rose today, though it stayed within the recent trading range we have seen the past week. The pair was lower in European trading, falling to 1.46, but then rallied in the wake of positive services data from the US and a strong surge in US stocks. We'll see if the resistance established last week will hold in tomorrow's session, or if risk appetite will send the euro higher. The Greenback was also pressured by the G7 meeting wrapping up without any expression of concern over dollar weakness. In fundamental news from the Eurozone, retail sales fell 0.2% in August, a figure that was better than expected as a rebound in the food sector lent sales some support. On the year, sales were down 2.6%, which was weaker than the annual rate in July. With 2 months in a row of negative sales in the third quarter, it suggests that consumer spending will not be a significant factor in helping to boost growth during the quarter. In the U.S., the ISM non-manufacturing index rose to 50.9 in September, the first time the index has shown the services sector growing following 11 consecutive months of contraction. The increase was led by higher business activity and a jump in new orders. The pound-dollar pair was unchanged today, despite a strong report on the services sector from the UK. The pair rose to start the session, testing its resistance level at 1.6020 that was established last Thursday, and then fell back down. From high to low, the change is about 110 pips in today's session. There's a tug-of-war going on between those traders that believe the UK economic recovery will stall, which is pressuring the pound, while other traders believe that recent economic data shows the economy emerging from the recession as a result of the Bank of England's actions. The UK services sector expanded at its fastest pace in 2 years in September, with the services PMI climbing to 55.3. In addition, firms are more optimistic about the next 12 months than at any time since April of 2007. The data counters weak manufacturing and construction reports for the September period, though it does suggest that growth returns to the economy as the services sector makes up a bigger portion of the overall economy. The data also shows that the Bank of England attempts to stimulate and prop up the economy through its quantitative easing policy may be bearing fruit. Commodity currencies were generally higher today, with the New Zealand dollar-US dollar pair climbing to retest its 14-month high from September 23rd at the 0.7320 area. The 160 pip move today broke through last week's resistance as a result of today's risk sentiment and drew strength from renewed strength in oil and gold prices. The US dollar-Canadian dollar pair fell to the 1.07 level, which was slightly above last week's support. The loonie benefited from higher oil prices, which rose as high as $71 a barrel today. Today's positive U.S. services report and gains in U.S. stocks also strengthened the loonie as investors left the safety of the greenback for commodity-linked currencies that traditionally benefit when global growth rebounds. Tonight, Australia will post its trade balance, which will be followed by the interest rate decision from the Reserve Bank of Australia. Overnight, the UK will post figures on manufacturing production, and Switzerland releases its consumer prices. Tomorrow, the fundamental docket does not hold any U.S. releases, though Canada will post its IBPMI and data on building permits. And that wraps up today's session. Thank you for joining us here at cmsfx.com, and happy trading.